Should Virgin Galactic SPCE stock, space stock, be part of your investment journey? Should you be buying space stock, or should maybe you should be selling it? I talk about that here. I talk about the incredible day today that Sir Richard Branson, the accomplishment he had with Virgin Galactic today. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. This is a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. If you want to follow my personal journey as I look for potential multi-baggers, what am I buying, selling each month, go to unrivaledinvesting.com. So now let's dive into what was the major news that happened just a few hours earlier, where Sir Richard Branson became the first in the billionaire space race, but to become the first billionaire space company founder to ride his own spacecraft. And this has been a dream for about 17 years, taking the VSS Unity, launched in the skies of New Mexico, to get into the upper levels, I think, of the atmosphere, almost into space. It depends on who you're asking. Making history, no matter how you're cutting it, because quickly after they posted, or around the same time that they were achieving this accomplishment, Blue Origin, Jeff Bezos's company, was quick to tweet about how from the beginning New Shepard, which is the vehicle that Blue Origin's launching, was designed to fly above the Kármán line, so none of our astronauts have an asterisk next to their name. Ooh, cold water, man. For 96% of the world's population, space begins 100 kilometers up at the internationally recognized Kármán line, and calling out that Virgin Galactic did not actually go above that line. They went something like 80 kilometers up versus the 100 kilometers up that Blue Origin is set to do in just a few weeks from now, with supposedly Jeff Bezos on board. And so they quickly posted, oh yes, this is a rocket versus a high altitude airplane. You have the largest windows in space versus an airplane sized window. So, it does sort of raise the question of, like, was it actually space? You did have a few minutes of no gravity, which was super cool to watch. So if you have any thoughts about whether or not it's space or not space, or the whole Kármán line bit, I'd love to hear your thoughts in the comments below. Either way, space travel is here. It is very exciting to bring commercial space travel, potentially start off with the super high end, but ultimately lower that cost curve over time and bring it to the masses. And so then the question is, well, wait a second, what's it mean for valuation? How should you think about this business? Like, what about the space stock price? How should we think about it? Let me do a quick plug real quick. Well, once again, my name is Daniel. You're watching Unrivaled Investing. If you want to follow my personal investment journey, go to unrivaledinvesting.com. First week of the month, I call out my full portfolio. During the month, I call out at least one potential multi-bagger, looking for stocks that could potentially go up hundreds or even thousands of percent over time. Let's actually go back now into SPCE stock or Virgin Galactic stock to understand, well, what's actually going on from here, and can you think, is it appropriate, its current valuation? What sort of assumptions you have to make to sort of back into it? Could it ride higher, or does it sink lower? Is it ready for liftoff? And so, their current focus right now, as of their first quarter 2021, is about, look, we need to get fleet readiness, fleet expansion, building more of these mother crafts, as well as these, high altitude, rockets, effectively, these planes that shoot off into space, and make sure we're getting the customer experience ready so that way we can roll this out to thousands of people every year. And they're focused on certain key markets: private astronauts, i.e. this commercial space travel where you go up into space for a few minutes and you get to experience no gravity and it looks amazing, or microgravity research or professional astronaut training for, let's say NASA or different organizations around the world. That said, I often like to look at companies trying to understand, well, are you potentially unrivaled? Do you have something that truly sets you apart from everyone else? The way I look at this is almost like the early days of the airlines, where you have three players that are going to be competing for the same sort of business, because you have Blue Origin quickly looking to get in the same space, as well as SpaceX. Both of them, I believe, are looking to go above that Kármán line. So here it is. This is definitely an angle of, hey, how do we figure out how to monetize this sort of commercial, really well-off travelers that are thrill-seeking? So doesn't fall into the, hey, you're doing something that no one else offers. And that the reason why that's a key element that I look at with every company is, when you offer something that someone else offers, then you have to be more conscious of what price you're going to charge. And that means you can't just raise prices willy-nilly every year. If you can raise prices willy-nilly, that does give you pricing power and long-term revenue growth. So that when you think, oh, your price has to be in response to, let's say, Blue Origin or SpaceX, then it does impact. And that's why understanding, are you unrivaled or are you rivaled, becomes critical to think about. So how should we think about the economics from here? They talk about 600 future astronaut reservations. They plan to reopen up ticket sales now that they've done this flight. And the current pricing is around, several $100,000 per seat equivalent, just to get on this super cool, the USS Unity, or this super cool rocket craft. Their current reservation count suggests hundreds of millions of future revenue that they could be achieving. But the reality is, at this point, they close to zero revenue, despite the fact that they have, with a $49 stock price, nearly a $12 billion market cap. That is a very full valuation for a company with close to zero revenue. That said, they do have material, you could say, bookings or expectations, deposits, reservations for future revenue. Now, one should call out, that they have had lofty past forecasts, and this was part of when Chamath Palihapitiya brought them public in 2019 via his SPAC, and now it's subsequently de-SPAC, so it's SPCE. And their projections in 2019, mind you, were that they were going to fly 66 passengers in 2020 and 646 in 2021. That obviously didn't come to pass. So one should recognize, hey, this was lofty forecast, didn't happen. But the value that you could potentially get here is, could this be the scale in which they scale up? Is this what they could look like with LIFTOFF in terms of their own operations, what they could look like? And the way to view it is, let's just view this as shifted out 3 to 4 years. Doesn't matter that it says 2023 here. Let's just think of it as 4 years from now. So 2025, what they could potentially do based on how they were thinking about this at the time that they came public. And so here it is. They thought they could do effectively 1,500 passengers to fly in 2023. And so then, then effectively you're penciling out several $100 million in revenue, $500 million in revenue. And then you're looking at approximately $200 million in free cash flow, approximately, because they're saying $274 million in EBITDA, $54 million in capex. So what they're saying is 3 to 4 years from now, based on building out their fleet, based on doing hundreds of flights each year, you could potentially have, let's say, $200 million in free cash flow. And that is a little bit of a red flag for me, because I'm thinking, wait a second, 3 to 4 years from now, if you don't have pricing pressure from Blue Origin or SpaceX and everything just goes to plan, you could potentially have $200 million in free cash flow versus $12 billion current valuation. And so that is just a hard pill to swallow for me personally, because I'm thinking, wait a second, that valuation assumes a lot of things go right, 3-4 years from now, and that is pretty rich, 60 times effectively that free cash flow. That may or may not happen. It's a little tricky for me, and that's where it gets to these hot takes that I want to talk about. Unrivaled investing hot takes, where, the first point is proof of concept versus product market fit. And, this is a really important concept, because the difference between a great accomplishment and a successful business model, like, it is great that Sir Richard Branson was like, look at me, I'm in space. And I think that's awesome that the accent didn't come across as well as I'd like. I'm more of a Sean Connery, like, I was in space, it was awesome. Can't do Sir Richard Branson, not yet. I'll practice for you, the unrivaled nation. And so, I'm looking at it, and now I've got Sean Connery in my head. And it's super cool that he was able to do this. But it hasn't proven out yet. Like, hey, we're able to consistently run these flights. We're able to do it at these prices. We're able to generate these sort of economics. This includes insurance costs. This includes, bad weather. This includes everything. They really haven't proven, like, oh yeah, we are just minting revenue, or we're minting cash right now. Watch us do this and watch us scale it up. So you need to recognize this is really almost pre-revenue. And value, I personally, that's not my game. Now, some venture investors are great at that because they're like, hey, I think this idea, even though it's pre-revenue, I think this is a multi-billion-dollar idea. Let's put some money in, and that can do really well for them. And one could argue that's sort of what Chamath Palihapitiya did, where he's like, this is pre-scale. I think this is just a great concept, and I think it could be worth multiples of what I'm currently putting my money at. And in fairness, that's what the market has done. Market's saying effectively this is worth 5x what the original deal is because it's at $50 a share. So you got to give credit there, but you need to recognize what game are you playing. I tend to focus more on the let's see this business scale, and they've already proven that they have an operating business model, and maybe it's just about getting further scale, leveraging their cost structure, and just tapping into this large addressable market, and let's watch them roll it out. And so that's the angle that I want to focus on, and then thinking about, okay, so how should we think about the valuation from there? Here it is. We're not quite there yet. Now, some folks can say, hey, you know what? I'm just there for the ride, and they want to bank on it. That's fine. You have to figure out what's appropriate for your own journey, and that's how it is with all investing. And then, so the next concept is that the reality is at this current price, at around $49 a share, nearly a $12 billion valuation, that is a lot baked in. That is a lot of assumptions effectively saying like, yeah, this is going to run smoothly. We are going to quickly ramp up to several $100 million a year. Several thousand people will have gone into space thanks to us. Commercial space will be a thing, and we are moving it forward. And I'm super pumped for them. I think they can do it. I'm just not sure if I'm ready to pull the trigger on that valuation. I'm not there yet. Personally, I would love it if Blue Origin and SpaceX were public. That way you could see those figures and be like, what's the relative valuations, and start looking at that. Maybe we'll get that another day, and maybe you'll get a SpaceX video in the future. But for now, this is just a little bit too hard for me because I'm looking at 12 billion against effectively no revenue for now. Let's see some operations. Let's see you start scaling it up. Because the reality is, I, once again, would rather find this proven profitable growth with little baked in. Here it is, 12 billion is effectively a lot baked in. And you can find companies where it's like, oh yeah, this company's not really baking in that much growth. And I think the growth could be way higher. As a perfect example, for my Unrivaled Investing Journey subscribers, this monthly potential multi-bagger that I called out is a company growing at 80%. And it trades at under 4 times sales. So that's sort of the construct that I'm looking at, and it's profitable, and it's led by its founder. So I'm like, that's the type of setup that I'm looking for. And regular viewers do know that I've called out Alibaba on several times, and maybe that'll work, maybe it won't work. So far it's down a little bit, but that's a perfect example where it's like, yeah, this business, it's about scale. It's already reached this massive scale, like hundreds of billions of dollars of valuation, but it's printing tons of cash. And so that's part of the reason why, in full disclosure, I own Alibaba, where it's like, yeah, I don't think a lot of their growth potential is baked in here. And that's why I own it. So that is a key element. And look, everyone needs to figure out what's appropriate for your own journey. Some people just say, hey, valuation doesn't matter. Let's just $12 billion for a company with no revenue. Why not? And so it's always important to understand not only the fundamentals of the business, but also the valuation, in my opinion. Everyone has to have their own journey. And if this video talking about Virgin Galactic SPCE stock has been helpful to you, please make a point of subscribing. If you're already a subscriber, I do appreciate that thumbs up. If you think I'm missing something on Virgin Galactic, and you think, maybe there's other revenue lines that I'm potentially missing. For example, one could call out maybe they start coordinating travel from one point, from LA to Hong Kong in an hour or something like that. If you feel like there are different revenue lines that I'm potentially missing out, I'd love to hear your thoughts on either their valuation or future growth prospects, or just the industry in general. What's got you excited? Thanks so much for watching.